You since long has joined. Right.
Hi, Father.
Hey,
Good, thanks.
good man, good. So I hope you are not driving. And good afternoon, Molala. How? Good. Good afternoon, Molala. How are you? Okay, yeah, almost everyone is there. We'll wait for. We'll not. Vinay would be late a little bit, 20 minutes, and Sugdi would be possibly late. And let's get started. All right, everyone can see my screen and hear my voice, right?
Yes, yeah, we can see the screen
Fantastic, brilliant, very nice. Welcome to this month of monthly session. We'll start with, as usual, we'll start with the general financial product advice warning. Please go through this. NP Financials Pty Limited, NP Financials or NPF advises all service recipients of the following. This information is provided only on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. I'll give 20 seconds for you to read through this, and then we'll get started.
Sir, could you please start recording as
Yeah,
well?
yeah,
Sure, you might have time.
yeah,
Yes,
done. Yeah, I've done it. Thank you for that, Sri. Alright, so once we have gone through this, let's get started. And with your questions, Molala says hi everyone. Selvan says hi Molala. Lisha says yes. Lisha says good, thanks. Selvan says welcome. All right, brilliant, very good. Okay, so if you please type in your there are two ways to communicate. Please unmute your mic and then talk back to me your questions, or write down in the chat box your questions. Or the third way is send it through email, but I prefer email. It should reach me at least one day before, so that I can go through the questions. So I got the questions from Sri. He's asking, hi, good morning. Please find my questions for discussion. How professional traders position themselves on the day of non-farm payroll, other than minimizing the market exposure? This is a very good questions. My answer would be very simple. Professional traders would possibly never ever trade the news, because it's a very high volatile item, and in a high volatile item, professional traders don't trade because of one simple thing, is the spread between the bid and ask widens a lot. When the spread between the bid and ask widens a lot, that means what? We are knowingly we are taking more risk, placing more risk onto the table. That's why we never ever trade, the news items, whether it is be non-farm payroll, or it would be like the FOMC. We don't trade, because if we are trading in a 2 minutes chart, or a 5 minutes chart, or a 15 minutes chart, for a intraday, and the spreads widen so much. I have seen major currency pairs, USD JPY, spreads widens to 26 pips. Like these bars are not for the professionals. With news or without news, please remember one thing: there are few difference between an amateur trader and a professional trader. Amateur trader are often right. I would not say they are not often incorrect. They are actually often right, and selecting their trades, and selecting the direction, they are often right. But where they go wrong, their timing the market is possibly not the possibly the worst possible. So that's why they suffer a lot. First problem is, they suffer from the fear of missing out, and then fear of losing money, and so on and so forth. Yeah. So that is the major problem with not problem, with difference between a professional trader and an amateur trader. The professional trader will never take more risk, never put more risk in their table, number one. And they will be not very often they will be right. They will be possibly right maybe 60% of the time or 55% of the time, and they will not be right 45% of the time, because they know when they are right, when they are correct, because of their position sizing and because of the risk appetite they are taking. They will be maybe taking 1% risk for a possible run for 3%. This is one way. And the other way is, if the professional is winning 80% of the time or 70% or 75% of the time, then taking 1:1 risk is not a bad idea. So to answer your question on the non-farm payroll which happened on last Friday around 10:30 here. So this is a 1-minute chart in front of you, that happens. This non-farm I did not see any jumping around. We need to remember non-farm. The non-farm is an event. Yeah, we understand that it's a possibly major news events, but because of its very nature of occurrence, it occurs every month. It happens every month. When something happens every month, that's not a very big risk like the FOMC, which actually happens once in a quarter. So that is a big risk item, because people have to wait for 1 quarter to observe and digest their decisions, the FOMC members' decision. So that's a big risk item. Non-farm, not a big risk item. So the last non-farm happened around at this time, 12:30, exactly around this time. So if trader, when a trader is taking a risk, for example, any professional trader, if he is in the front of the first of all, they will not trade. The answer to that question is very simple. They will not trade. Even if you are trading, if you are learning, if you are in the learning process, and you want to trade in the demo account, I would be very strong on this. News item must be first tested in the demo account. So what will, from our knowledge of NP Financials, what we will do, this will be the zone of support before the non-farm payroll, isn't it?
Yeah.
Agree? All of you agree? Yeah, because the price jumped once, twice, thrice, and then higher low, and then new zone of support, and so on and so forth, like this one here. Yep. So when we are seeing this and we are trying to trade the news, there are many people who actually try to trade the news and place two trades, one long and one short. My advice would be always to them would be, you will be losing 2%, because you will be stopped out in the upside as well as the downside, because of the very nature of the high volatility in the news item. Last week it was not very big. So this is 10:30. This is the non-farm start. So if you are a professional trader, either if you are a good trader and you are testing it out, so possibly you can put a pending order at around this point, but that's a very dangerous one. I would never suggest that, but just I'm answering the question, possibly in a very unwilling hypothetical way. But anyway, so if you are placing a sample here, pending order at this point of support or this point of support, with a risk of 7 pips or 10 pips, then we can target here 10 pips for 1%. But see, the bar, it's before the non-farm, it was the standard bars, and with having only less than 1 pip, 0.8 pip, 1 pip, and 0.6 pips, and so on and so forth. But the very bar of the non-farm actually generated a risk of 6 pips compared to 0.06. So it's a 10 times bigger risk. If we are, no one knows whether it is going to go this way to hit our stop or that way to hit our stop. So it actually exactly went to the this thing previous support level, and if we have placed a pending order here, then possibly we gained in that. If we are taking if we are taking a risk of 7 pips plus 310, then and 21 would be a possible gain of 2% in that. But my answer to that question is we would never do that, because of only one thing, that the very nature of the news item creates a volatility, and that increases the spread, and thereby it increases the risk associated with the trade, and the uncertainty of moving of going up and down at the same time. Did I answer your question?
Yeah, that's correct, sir. I mean that's what we have learned to our course, that do not trade on any news.
Yeah.
But based on the let's say the non-com is happened on Friday night. But if I'm in the trade on Monday, Tuesday, so how to what need to be done there?
Okay. So now I hope everyone, so Sri voice was low. I am increasing. I hope everyone heard Sri well. And did I also I repeat? Possibly I will repeat. Sri is asking if we are already in a trade before the non-form, then what to do. So for example, in our the trade which we gave was not triggered. So let's see what we could have done. Okay, let's go to the
Or maybe you can use the AUD Aussie dollar, sir.
Aussie dollar. Okay.
Yes, please. 12 hourly or daily Aussie dollar.
Okay, we'll go to Aussie dollar and then change it to daily. Okay. So when we gave this trade idea, I think the trade idea was given on 28th of September, and it was written downtrend line, break of the downtrend line. I think that's what we have written.
Yeah.
Break of the downtrend line, isn't it? Where did it
Yeah,
go?
that's correct.
Yeah, break of the downtrend line on the Aussie dollar. Yeah. Okay, so let it go there. Let the Aussie dollar come. Okay. So this was the downtrend line. What we have done after months, I would say possibly 1 year complete, after months of trial and error, to develop an automatic system of when in which the system and our system is generating the trend line automatically, so we are not drawing them. And good news is we are successful in that, and our system is now generating automatic trend lines which are very helpful. And for that we have written here on the AUD 0.7113 and daily downtrend line broken. And Lisha asked the question, what was the downtrend line? And the downtrend line was the red dots are the swing highs and the green dots are the swing lows. So this is a swing high and that is a swing high. When we have when my computer or the system or the system which we have developed join this line and extend it to it, so we get a break of the trend line here. This being a Sunday bar, someone may take it, may not take it, or with the timeline setting of the platform, you may say that display weekend data, this no display of weekend data, and so on and so forth. And how to know what is this Aussie? If we click here in the I information, it will tell us Aussie is a Forex. So Aussie is a forex. So for the time forex time zone, we have set UTC plus 1 and so on and so forth. So depending on your settings, this some bar may come, may not come. But then all said and done, let's see that the Monday bar, this bar has actually broken this trend line, the broken this trend line. So and plus some points here, depending on the trend. So the trend is up, as you can see, the trend is up. So we place this trade from here, supposing from here, and we are having a risk of some 90 pips or 100 pips, and we can possibly target here 165 pips. But at the same time, the non-farm is coming. So when the non-farm is coming, what we do, so before non-farm, this was the scenario before non-farm, this was the break of the trend line in front of you, and we went long here. If you prefer Sunday bar, if you don't prefer Sunday bar, then you go on the Monday bar. Then from here, so we see 1 2 3 4 days of up movement, and in the process, what it has done, it has broke one, and in the process, it has already broke the 2. So we have a principle of break 1, cannot break 2. So we have broken both here, and if this high is taken out, there is very high probability then this red dot was not there. This red dot only comes on after this bar closes and next bar opens here. I'm answering C questions. C Uttagi's question is what to do on this Thursday or Friday morning or Friday afternoon when the non-farm payroll is supposed to come. I would not do anything because of the belief that if there is a potential that prices go up, because we already have two supports. These two lines are already there. We are already having two supports, but price being price, it can do anything. It can either come and close below or go up and hit the intersection. And as we said in price hates intersection. So we'll to answer your question, we'll do nothing because we want to see what the non-farm result would be on this bar. So on the next day, so the non-farm result was on this bar is the break of a uptrend line. We need to remember when we are either drawing the manually the trend line or taking advantage of our automatic trend line, we have to remember the green bullish bar. These trend lines are not rocket science. You all know that valid trend line, tentative trend line, and I have been doing this for last 2010 for last almost 10 years with thousands of students and with lots thousands of strategies. But the one which we discuss in our trader foundation, bullish bar, bearish bar, up bar, down bar, peaks, troughs, swing high, swing low, valid trend line, invalid trend line, they are the strongest one. So what we need to see, we need to observe. It is always better to have automatic lines drawn so that we are not missing anything. So the bullish bar has to break a downtrend line like this fellow did. It has to touch close above, and this is the actual one. And then we go long from here. Because we cannot keep this as a signal on a trade idea, because most of you are not having the weekly bar shown in your chart. That's why we waited for this bar and then gave a call. That's a little bit late. That's the difference another difference between professionals and amateurs. Professional would enter here because the risk in that trade will be 39, but the amateur would probably enter here with a risk of 169. The direction of both of them is correct. The only difference is, as I told, the timing of amateur traders are often late, and that bad timing often lead to maximum risk. So this is the so for going long, what we are looking for, a bullish bar to break a downtrend line in red, and for going short, what we are looking for, a red bearish bar, breaking the uptrend line like this one, breaking the uptrend line, this one, next one. So these are the so don't get thanks Lisa for her suggestions, and we could implement. It took some time because coding takes a hell lot of a time, 3 months, 6 months, to because our coders, our IT team and coders has to go to the core of the HTML and join and write the CSS and so on and so forth. And whenever we are uploading or upgrading, for example PHP, or even WordPress, or even a simple plugin, what happens, that erases or that overwrites our codes. That is the biggest challenge we have in this line. That's why it takes time. But anyway, thanks to Lisha for her suggestion. We could change this, and we are writing why we are taking this trade. So for long, like Aussie dollar, downtrend line has to be broken, and for sugar short, an uptrend line has to be broken. Yeah. So these are the two things we need to remember, and so that's why when that is broken, the sorry, what is this, uptrend line, green, up and blue uptrend line is broken by the bearish bar, we go short. When a bullish bar breaks the downtrend line, we go long. So, and then what we have written in the, now what non-farm payroll, what did it do? It actually prints the close, it's the printing of this close of this bar, so-called non-farm day bar, is below the uptrending line. So what we have done for that is you went to the trade outcome to tell you that because it has already broken the very principle in which we went long on a trend line. If we have gone long in a trend line, then you have to respect the trend line. If we are going long on, it can break 1, cannot break 2, then we have to respect that. And if we are going long on our strategy, we have to respect that. And if we are going long on Fibonacci and candlesticks, we have to respect that. And the very purpose of going long or short, when they are reversed, when price is reversing, then we have to close the trade and do opposite. So we have written here long trade, Aussie long trade would be considered closed if price goes below 7084. That means it has already closed below the line. Now the low has to be taken out. So did I answer your question, Sri?
Yes, sir. Thank you very much. Yeah, basically do nothing on the heading.
Yeah. Second question, what is the correct relation between indices and forex trading? For example, that when S&P 500, ASX 200, FTSE 100, DAX trending upwards, what would be the effect on respective commodity and forex currency pairs? I think I'm getting where from this your question is coming. I would say that is not if I have understood your purpose or intention of asking these questions is possibly in your back of your mind somewhere in the subconscious it has been stored that the relationship between any two instrument more often than not hold good 100% of the time. If that is in your mind, that please erase that understanding, because that's a wrong understanding, that's an incorrect understanding. So whenever you are asking correlation between same assets or different asset classes, we need to remember one thing. Maybe 55 to 60, I know I'm continuously reducing this. I used to say 67% they hold good, but with the observations, the statement keeps on changing. Possibly I'll say 55% or around that the asset classes are related, and 45% of the time they are not related. So we have to do that.
Okay.
To answer your question, indices is a asset class and forex is another asset class. So there may not be as such any relation, but the indirect relation is the money is the only relation. Smart,
Yeah.
and that money can be divided into smart money and the dumb money.
Mm-hmm.
Smart money is the money which the smart institutions or the members of the trading community are investing on. So that is somewhat smart money. It does not mean that Goldman Sachs, whatever they do, they are doing in a very smart way. Of course, they can be more smart or better, smarter than many of us because of the power of their knowledge base. But at the same time, the important point here is to remember where to follow the smart money, where the smart money is going, or the excess money is going. For the time being, thanks to President Trump, for last 4 years, and not only President Trump, from Ben Bernanke, for last 12 years after 2009. How many years? Yeah, almost 11 12 years after 2008 global financial crisis. 2000, they started printing, and Ben Bernanke said, if required, I'll throw money from helicopter. That's why he was known as Helicopter Ben. Because of the loose money, and the excess money, they are putting into stocks, and they are putting into the indices. So the smart money as of now is possibly more invested into stocks and thereby indices. Indices is nothing but a byproduct of stocks, because like S&P 500 is nothing but buying one S&P 500 is equivalent to buying 500 shares individually. So that is the meaning of that, or that is the correlation between that. So the possibly from the fundamental aspects, I can say the smart money is with the asset class called shares. Shares. That's why shares are one way. Shares are one way, and the relationship between, if you have to see that, I have to follow what Selvin said. So break it down into two. So let's do that. If you see the movement of the post Trump era is Tesla has gone up from 36 now because of this stock split, from 35 to 415, and so does Apple and Amazon and so on and so forth. So what you have to do, you have to keep you have to make
So
yeah, go.
what I'd like to understand here is you're actually right. I mean, uh, correlation. I think there is somewhere stuck in my mind regarding the correlation of
Mm.
two instruments.
Mm.
For example, whenever I mean S&P 500 or for example AX 200
Mm.
index is going up, yeah,
Mm.
then the Aussie shares are going up.
Other way around, when the Aussie shares are going up, ASX is going up because it's a composite of shares.
So okay, Aussie shares are going up. Yeah, AX 200 is going up.
Correct.
That time the Forex Aussie dollar,
Mm.
what I mean somewhere I read on the note, the stock, when stock goes up,
Mm-hmm.
the Forex market goes down. This is where I'm coming from.
Yeah. So best ways to follow what Selvan has suggested us.
Yeah.
Previously it was working on one chart, but nowadays I don't know, because of logarithmic scales or something different, I don't know why it is not working so well. What you have to do, you have to split the screen into two asset classes. On your left is Australia 200 cash, which is ASX. On to your right is Aussie dollar. Both belongs to Australia.
Yeah.
And one is the index and the other one is Forex. So tell me, what is the relationship? And these are monthly from 2004. So are you getting any relations? So
Yes,
let
there is a positive relation.
positive relation, yeah. So this fellow from 2003 to 2007 went up.
Yeah.
So this fellow from 2003 to 2007 went up. Yeah, 2007, where is 2007? 2007 went up. Yeah.
Yeah. Yeah.
And then this fellow came down from November 2007 to May 2009. So this fellow, it took time, it went up to, see, that's the beauty. This fellow coming down from October 2007, correct?
Yeah.
October 2007, mind you, it is coming down from November 2007 or October 2007, correct?
Hmm.
Australia 200 cash ASX, but this fellow lagged
Hmm.
6 months, 7 months.
Yeah.
Yeah,
Yeah. Yeah.
7 months it lagged, it went up and it came down. Yeah,
Mm-hmm.
and eventually it came down, but it lagged 6 months. So what do you do for 6 months when this fellow is coming down from October 2007 or November 2007, and this fellow started coming down from June 2008? What would you do for 7 months? You'd be stopped out if you only believe that as a correlation is the only way I would trade.
No, no, no. I'm not saying that I will only consider the correlation, but just I'm trying to understand if ASX is going up, then then what should be the immediate impact on the Aussie dollar?
Nothing. As I am telling you, I'm answering the same question.
Yeah.
This fellow came here down from
Yeah.
October 2007 or November 2007,
Yeah.
but this fellow started coming down from June 2008. So there is no immediate effect. That's what I'm saying.
Okay. Okay.
There is
Okay.
zero immediate effect,
There
almost.
is no. I mean, there is no. Forget on the indices. Just follow the trend on the where which you are trading.
Absolutely. Absolutely. So more and more I would say and continue to say, do not stress too much on the correlation.
Sure.
Only
Thank you.
only follow the trend, and that is the best way. We have designed our trend to be followed by our trend lines, because if there is a trend, then there is a trend line, isn't it?
Yeah. Yeah. Yeah.
All right. So
Good. Very good.
did I answer your question?
Perfectly, sir. Thank you very much.
Not a problem. All right. So now Selben is asking. This is. Sometimes I miss my slides. No, yeah. Okay. Selben is asking question: in Aussie dollar, do you pay any attention at all to the break of the previous swing low? All right. So I hope Selben is asking this question for going down. Is it correct, Selben? Did I answer your? Did I understood your question? Did I understand your question correctly? When you ask any attention at all to break of the previous swing low, yes, I think yes, previous swing low, yeah, of course, yes. Remember, when a trend is up or down, when a trend is, for example, when a trend, this is ASX, forget, this is Aussie dollar, when a trend is going down, then it will break all the previous, all the swing lows, so let's see. No, why we don't have to spend time, because our system is already doing it. So let's do that. Take a monthly chart and point the swing lows. So for example, let's see from April 2013, when the price started coming from April, from here August 2011. I'm answering Selben's question. Selben's question is, in Aussie dollar, do you pay any attention to all the break of the previous swing low? So when we are here, we are seeing two things. We are seeing two things. The first thing we are seeing is the low swing low. Can you see that?
Yeah.
Low swing low. Now Selben is asking whether at this point we are bothered about the break of this one and the break of this one because of the previous swing low. Are you asking this, Selben? If yes, then yeah, we need to remember, in a downtrend, see this trend lines I have selected, not to clumsy this chart too much. I have selected the year 2014. If I change this year to drop from 2018, it will only drop from 2018. Yeah, it will only draw two lines. Yeah. So for a monthly chart, what I have selected is maybe 6 years. That's what we say, 2014. So if I select 2014, then it will join the lines. It will join the line. So yes, to answer Selben's question, we always pay attention to the break of the previous swing low for going down. or going down. So for example, this swing low is broken, this swing low is broken. When we are here, this swing low is broken. That's why we have come to the conclusion that it can break 1, it cannot break 2. Now that we are here, on a monthly chart, this was the previous swing low, but in a daily chart, so let's do that.
Well, that's what I'm talking about, is the daily chart.
Okay.
And your long call, trade call.
Okay, let's go there. So in a daily chart, this was the last swing low when the trade call was given. So this was the last swing low when the trade call was given. This was the last swing low. So what we are seeing from the previous, that this first swing low is broken 1, and then this second swing low was broken 2, and then the third swing low is broken 3, fourth swing low broken, fifth swing low broken, and sixth swing low broken. T star, these are all T star, your swing low star. Seventh swing low broken. Yeah, when 7 swing lows are broken, and we saw a break, and in modules and units, possibly you remember, we have written a break of a important trend line is the first indication of a change, possible change, or the weakness in the trend itself. So after 7 swing lows were broken, on the previous side, we are not counting these ones, we are not counting these swing lows. 7 swing lows are broken, and then we saw a break of a downtrend line. Then we would not too much bother about this. Of course, price can go down 100%. So when we are giving a trade call here, remember, we are only thing we are saying is that this is possibly a low risk. If we are going long from here, low risk trade of 40 pips against 150 pips. But if you are not following Sunday bar, then it will be more. So if we, for example, if we are going long from here, when the price crosses, as Selvan is saying, possibly crosses below this swing low, and then low taken out, will be immediately closing the trade. So how much you will be losing? Will be losing maybe 49 pips at the most, 49 pips. So we consider taking a risk, because trading is a game of probability and a business of chance. When we are ready to take this chance, we'll keep in mind that this swing low can be a possible support. Did I answer your question, sir?
No, I was considering why you're going long.
Because of the break of the trend line.
It's broken the trend line, I understand that. But your target is 74 some change on your trade call. And to me, this looks like a retracement of the previous impulsive down move.
Okay. So if you are considering that on it can break 1, it cannot break 2, then possibly I would say it's not a very strong downtrend. I would not say that this is a downtrend. No way I would say this is a downtrend, but a possible great correction here, because it has broken 1 and possibly broken 2. When it has broken the first, of course it can break 1, it can break 2, we can go short from there. That's why we can go short from here. But if you follow for a trend change direction, swing lows are to be broken. So this is the break of the first, and this is the break of the second, and then immediately crack and snap back on that. So for small trade calls like this ones, for the small profit and loss for this ones, we would be taking the first weakness in the market, and that weakness in the market is and as per our understanding, is a break of a trend line. That's what we have been doing for last 45 months from December 2016, and in last 45 months we got a total pip collection of 31,586 pips across the 45 months, with a collection of 810 pips per month only from the trade idea section. Alright, so Lisa is asking, so the program trend line only looks for 2 swing high swing low with the swing high swing low in between, does it ever join more than 2 points? You are 100% correct. It joins two swing highs, and provided there is a swing low in between. So this fellow would be drawn from this swing high to this swing high, provided there is a swing low, this one, and this swing and when it's the magic of this trend line is when this is drawn on this date, 17th of September. On 18th of September there was a retest, and on 21st of September there was a retest. That's the beauty of this trend line. Only joining 2 points and between the swing lows. Lisa is asking, can you please explain again the price for Aussie where the professional will enter versus amateur when the price broke the trend line? Yeah, okay. Lisa's question is, can you please explain again the price of Aussie dollar where the professionals will enter versus amateur when the price broke the trend line? Alright, depending on the time frame you are trading, whether you are trading intraday or you are trading end of day or you are trading 4 hourly or 12 hourly, so depending on the time frame you are trading, the risk could be accordingly. For example, for a Aussie dollar, the regular movement of the Aussie dollar per day may be 100 pips, maybe for 100 pips, but for 5 minutes chart it will be maybe 5-6 pips, as we saw for the Japanese USD JPY. Okay, so for a best entry, you name it, a professional way and an amateur way, whichever way you are looking at. So the best entry from a professional point of view is defined as a possible least risk associated with the trade. So the risk least associated with the trade in front of us is this one. When this bullish bar crosses the downtrend line and close above, and it's high to be taken out depending on the time frame, daily maybe 20 pips. So the best trade or the least risk trade, the high of this one is 45, 46, and then we would enter at around 66 around this point. So this is the least risk trade, 59, and even if it goes up to this point 89, it is more than 1%. So the to answer your question is, enter with the least possible risk associated with it, but it is having it can have a danger in that the risk low risk you are taking. For example, if you are entering somewhere, which one is that? For example, arbitrary, let's see, for example, if we are entering here and putting a stop loss just above this because of the least risk, that's not a correct idea. First of all, because that is not broken any trend line, number one. This is the only bearish bar which has closed below the uptrending line. We have not gone short here, we have not gone short here. The argument can be why we cannot go short here from this point to this point. Then it will be the risk of only 75 pips. In the hindsight, asking that question would be easy, but when you are trading on the day, at the moment, you have to follow either the strategy, either the signals which are being generated, like this one, for a instrument. For instrument of shares, the strategies are in front of you. So the strategy is telling us 25th of March, and then again on 8th of April, again on 33rd of April, and so on and so forth. So it is telling us generating so many long opportunities to buy Facebook, and it generated the signal to go short on 4th of September. So when you are following either one strategy or any principle of trading, then you have to follow that to the 100% religiously, always. So in that case, if our strategy tells us that we have to go short when the uptrend line is broken, then we don't have any choice between whether it is a professional entry or an amateur entry, to go short from here with a risk of 148. In the hindsight, this will be 75, but this is not a case of hindsight, because this is the exact case of a break of a trend line like this one. This is the exact case of a break of a trend line. There is no hindsight involved here, because when we are following the rule, this is an excellent entry like this one. This is a much better entry, but this is an excellent entry here. When you go short here, taking a risk of 73 pips, you may argue that the trend is going up and down and so on and so forth, but we have the counter argument that if there is a trend, there would be a trend line, and if the trend line is broken, we will do accordingly. So did I answer your questions, Lisa? Lisa says yes. Lisa's next question is, can you please explain? Okay, then is there a limit on the number of trades you enter with Moulalo? Moulalo is asking, is there a limit on the number of trades you enter with IG on intraday? No, my dear. That's a good question. That's a good they are brokers, right? And brokers make money from the spread upon the bid and ask difference. They do not make money from anything else except spread and commissions what they charge. And if they are gaining $10 from each one of us for a trade, and they have 300,000 clients, they made a money, big gig. So there is no to answer Molala's question, there is no limit on the number of trades you enter with IG on a intraday. The more number of trades you place, they will be more happy and possibly call you for a meeting or a party. But having said that, on the lighter side, we actually try. I know I possibly understand where from the Molalo is coming. We possibly try not to take more than 5 trades per day from an intraday perspective. From an intraday perspective, when you are being developed by us in our intraday strategy, then possibly you'll understand that we have not written it down, but we have a rule that maximum will take 5 trades per day, and that's what we do. For example, if I have to show you what are the 5 trades possibly we can do every day, we have started doing it with your suggestions. So we are doing it, posting it on the Instagram or in the Facebook. So when you go to instagram.com/NP Financials, you can see the posts every day after the trades. Sometimes it is after 10:30, sometimes 11 o'clock, sometimes 3 o'clock, sometimes, but it has to after 9 o'clock and before 4 o'clock. That's when the market actually opens and closes. So on last Friday, which was on 2nd of October, these are the 5 signals were generated, and we went short. Before that, on 1st of October, the signals were generated 5 long. See, this being intraday and intraday being intraday, one day you will have 5 longs and the other day you can have 5 shorts. So that's how frequent the intraday trend changes. On 30th of September, we have 5 shorts here. 5 shorts. So when you become time rich, and when you have decided, you can only be time rich if you take some bold decisions. For example, if you have taken a decision to invest, to become a full-time trader, then you become time rich, because from 9:50 when the market opens and the banks open at 9 o'clock, then we have the possibility of market moving. So from 9:50 for ASX, in the morning session we do 9:50 to 4 o'clock, and then in the evening sessions we do only sterling, and each of the trades which we take are actually you can see here, or you can we keep our own record of each of the days in which we have taken which trade and so on and so forth. So these are the trades which are being taken. The last date was 2nd of October. This is 5800 means ASX, and so many trades, but it is more than 5. But we generally advise our clients not to take more than 5 trades. This is 1st of October. These are the 5 trades which was posted in Instagram. These last 2 trades were not posted because of to keep parity. And then on 30th of September we had this 4 trades and then 3 longs, and this is the advantage of becoming time rich. And this is on 29th we had 3 shorts, and so on and so forth. So this is the advantage of becoming a time rich trader, in which you have the time to select which time frame you want to trade, either Australasian session, which is very good for ASX from 9:50 to 4 o'clock. Actually I say 4 o'clock, but if you go and see our post in Instagram, they can last up to only 11 o'clock here on this day, and this one only up to 3:30, 1:30, and this date only up to 11. So you start at 9:50 and you get over by 11:20. So and you start from 9 o'clock and then you get over by 11 o'clock. So to answer your question, there is no limit for the number of trades, but advice is less is more. But intraday, why we take 5 trades? Because even if we are facing a negative situation for 2 of them and 3 of them are positive, and then we are net positive. So you can capture your screens every day, so that if you are doing any mistakes, you can actually learn from the mistakes. And doing mistakes in intraday trading, unless and until we are following the rules, can be very, very simple, and it's highly possible to do that. All right, did I answer your question, Molalo? Molalo says great, thanks. All right, so then we will go to next question. Lisa, I think it is understand why this is a good question. So Lisa is asking, so many swing lows have been broken, which means very bearish. So how to get confident? So everyone can read Lisa's question. Yeah, that's a very valid question. That's an extremely valid question. And that is one problem which may come with novice traders, and she is asking so many swing lows have been broken, which means very bearish. So how to get the confidence to go long? Yeah, very good. So I'll have 2 ways to answer this question. First way is a philosophical, not philosophical, actually a quote from our great investor Warren Buffett, and who said, be greedy when people are fearful, and be fearful when people are greedy. That exactly resembles your questions. So what he is saying, I would say a philosophical, actually a very intelligent answer. He is a very witty person. So what he is saying is, be greedy when people are fearful. So when people are fearful, that's your question is saying, how to get confidence. When people are fearful after seeing a 407 pips drop in an instrument like Aussie dollar, 5.5% drop, which is a quite sizable drop, being an asset class in Forex. Forex never goes down 40% like stocks or indices. Indices can correct 40%, then go up 500%. That is a possible criteria of an asset class called stocks or indices. But Forex is not such, because Forex is representing one country, where the stocks is representing one company. That's a big difference between the two. So in a Forex, 5% drop in only 21 days is a big enough drop, Lisa, to answer your question. So if you when you have studied the previous drop of this up move, if you have studied it, previous drops of this up move, let's see from here, after COVID, there are 2 ways to attack your question, Lisa. That's what I'm trying to say. After COVID 19th of March, you have to observe. If you are a good trader, you'll be knowing what was the previous drop, 3.76% here. Next drop means correction, 2.54. Next correction, you don't have to be very very precise on this. Just do this gap in percentage and make it default. So 2% here, and the next one here was sorry, next one here the corrections were 2%. So what I'm trying to show you, the forex corrections are not more than possibly 2 to 5%. So 1.91, 1.66, so many corrections in after covid, so many corrections, 3%. The last correction which has happened, which made you fearful, was a correction from this swing or from this swing high, was a correction of 4%, or from this swing high to this swing high is big 5.5%. So when you see a big correction like this, 4.6 to 5.5% compared to the previous layers of corrections, 1.3 to 2.41, 1.91, 1.66, 4.07, this is the biggest one. Then you should remember the big quote of a big man: be greedy when people are fearful, and be fearful when people are greedy. So that's I would say, as this stage, that's a philosophical answer. And the practical answer to your question is, the only confidence only comes if you have practiced it before. If you have practiced this structure of taking a long when the downtrend line broken, going a short in an uptrend line broken, then the best way to practice that is even if you are not doing live trading, in a demo trading, what you can do is observe, try the strength of our trend lines. I would say it is excellent. Try the strength of our trend lines, and then see every day, then see what is happening day by day. From last Friday, 2nd of October, when we went short, when the trend line is broken, when we went long on the uptrend line. Forget about the time frame, whether it is 5 minutes or 1 day or 5 months, does not matter. The structure of the market would remain the same. Yeah. So if you continue to do in a 5-minute chart or a 1-minute chart, why I am asking to, because it expedites your learning. Seeing 1-minute chart for a day is equivalent to seeing a daily chart for so many days. Yeah. And remember how many minutes we are having in a day. So if you see a 1-minute or 5-minute chart in a demo trading environment, it will actually expedite your learning process. To answer your question, how you get strength, how you get what was your language you have used, confidence. Yeah. So to how to get confidence to go long here, the answer would be only to see this, practice this, or talk to this friend of yours, which is called price action or trend line, maybe hundreds of time. I have done millions of time so hundreds of time, and then see what is the result of those trades which you are taking in a demo trade. Or even after coming from office, 6 o'clock, you sit down, and your lines would be there after 6 o'clock, and you see how many lines were broken, and how many times you were successful, and like this fellows, and so on and so forth. Did I answer your question, Lisa? Great. Then Lisa says yes. Moulalo says great. Then Lisa says, so your long trade is possibly for a correction on upside, then possibly for the trend to continue down. Let me read the question again. Question is, so your long trade is possibly for a correction on upside, after the correction. The question should be framed as after the correction. Yeah, am I correct, Lisa? Am I framing your question correct? So the long trade should be after the correction on the upside. Yes. Then possibly for the trend to continue down. why should I take a trade long when it is continuing to go down? Can you please explain your question, Lisa? I did not understand. So what I have understood, if I have to answer that, she's asking, so your long trade is possibly for the correction on upside. That is correct. When the corrections are like this one, when the corrections are completed, when the corrections, that means this swing low, this swing high, this swing high, when the corrections are completed, we go long. So like this fellow we go long, this fellow we go long. So the first part we have I have understood correctly. So the long trade should be after the correction. And second portion she is explaining goes back to the bearish price action. Yes, after it goes back to the bearish price action, we will be taking a long trade when the downtrend line would be broken. I don't know whether I have answered your question or not. If not, please rephrase that question and please post it again. I'll go to the next one. Shin Song is asking, for the Aussie trade, would fundamental changes affect decision to enter? Say argument's sake, if Reserve Bank puts out a statement suggesting rate cut likely. That's an interesting question. Okay, there it is having two parts. So the first part is, for the Aussie trade, would fundamental changes affect decision to enter? I would say, if you are if I'm a 100% technical trader, then the answer would be no. Why no? Because I don't know the because I'm not paying heed to or not listening to the fundamental news. Fundamental changes, when you say fundamental changes, it's a big thing to me. Fundamental change can be anything, what can be the fundamental change? Like, for example, for fraud or something, Commonwealth Bank of Australia is going bankrupt tomorrow. So if that is like Lehman Brothers, it is possible. Jokes apart, it is a possibility, because the like Lehman Brothers went bankrupt overnight. Well, not overnight, but something like that. So that is a fundamental change. But if you are saying if you are telling that fundamental changes means Reserve Bank putting a statement suggesting rate cut, I would say yes. That's a big effect to our trading, forex. What is that big effect? The big effects are anything and everything coming from the person who is actually representing Reserve Bank. For example, Reserve Bank governor like Australia, or Fed chairman in US, or ECB chairman in Europe, and other nations, state governments, governors. Yeah, so if it is coming from a governor that yes, the rate cut will be there, even if he is not doing it, for the sake of it, he will just want to say it. Like I think Mr. Low said that the low low all right, the lower price of Australia is good for the economy. That's what he said. How can you, like a Reserve Bank governor, how can you make that statement? You can, of course. You have all the power. What does it mean actually? If we have to read the underlying meaning of the statement is, what he is suggesting is, I'm not going to increase the interest rate, because if I'm thinking to go to change the interest rate to the upside, the Aussie dollar would strengthen. That's what the underlying meaning of the statement. If the governor is saying that, then Sing Song, yes, your question is very valid. We don't have to pay so much attention to that news, because immediately what we will see here in the price action, either price will go there or jump there, depending on the nature of the fundamental news from the Reserve Bank governor. Did I answer your question, Sing Song?
Yes, that's clear now.
Thank you very much for that. And Sri is asking how to identify the subtle difference between what? Please explain. Difference. Okay, he's writing differences between reversal, pullback, and correction in 12-day, 2-day and weekly? That's a very good question. That's a very good question. Sri is asking how to identify the subtle difference between reversals, pullback, reversals and reversals, pullback and correction. Pullback and corrections are same, Sri. So only reversals are there.
If you could please take pound Aussie 12 hourly.
Sterling.
Yes, please.
Sri asking sterling Aussie 12 hourly.
Yes.
Okay. From the look of not 6, from the look of it, see the days, see the lines which are coming. One limitation of the software, not us. One limitation of the software is it extends the line to the left hand side as well. So that's the limitation of the software in the version to 10.3, because we are using 10.3 as the version which is giving us almost free, $40 charging and $40 waiving, so on and so forth. So so this limitation in as far as version 10.3 is concerned, the software will draw not only extending the right hand side is beautiful, because I want that line to extend to the right hand side, because the right hand side is unknown. But why are you extending this to left hand side? That is the limitation of the version. We have to live with it. How long we have to live with it? We have to live with it till the next version, which is 11, possibly will be in place, in which we have requested them to consider this and clear this bug. I would say this is a bug or a limitation. So only it will come version 11, it will only extend to the right hand side and it will not extend to the left hand side, because extension to the left hand side is meaningless and clumsy as well. So please bear with the software till version 11. So we are now in 10.3. So I forgot the question. Okay, what is the question? 12. Okay. Now he is asking, Sri is asking, reversal and correction. The best way to understand the difference between a reversal and correction, first understand what is a reversal and what is a correction, and what are the best representation of price for our reversals as well as corrections. For that, I would possibly request you to please go back to your instruction based discussions and go back to your 3-month trader foundation and read as many times as possible this, because it will tell you the best possible way to know a reversal. All said and done, the best possible way to know the reversal is what? Maulana, Sri, everyone, is what?
Candlestick.
Correct, 100%. The best way and the earliest. What is best?
Okay.
Best is nothing but it can be replaced by earliest. Why earliest? Because it is the risk associated with that is the minimum. That's why. So that's why I would request you to go back to our module 3 and read and reread again the possible ways in which we have pointed out what is the best possible reversal. So that's what Sri Utagi said. See, reversal. Can you see that, Sri? Yeah.
I understood that question, sir. But as a trigger,
because you have asked the question, you should understand the question. Sri is saying I have understood the question. He is asking the questions. How can he not understand it? Okay, go.
as a trigger, right, for the reversal or the correction or the start of the correction, the trigger is the same. For example, if you can see, it's a DCC, dark cloud cover,
Here,
which is what is the day? It is
28th September.
28th of September. But when I'm at the 20th of September or the next day, yes, I mean, based on my understanding or so this is going to be kind of a downward movement. Whether it is a impulsive or corrective, then that will be defined later. But at the start, what should I understood? What would be the possible move as a part of the correction, or it's going to be a full reversal?
On this date?
Yeah.
Okay, very good. So Sri is asking, okay, I'll go a little bit further and then I'll come back to your point. Okay.
No problem.
Okay.
No problem.
So I'll start from here. I'll start from here. So September 11, starting from here, where we have a zone of resistance. Can you see that?
Sure.
Zone of resistance, yeah? Zone of resistance, and it could not clear 4 times. Then it made a lower zone of resistance. Can you see that? Yeah? And then the first weakness of the up movement would when we are talking about 4 hours and 12 hours and lower time frames, possibly we would use the term movements instead of trend, because if we have to decide a trend, best possible time frame can be weekly, monthly, 2-day, or at least minimum daily. Below daily, we should not use the term trend. Of course, there can be trend in 5 minutes and 1 minute, but that will create a psychological barrier if we decide on the trend. If we only stick onto the trend. So first trend line broken here on 14th of August. We will go short here, and we will be we keep the stop loss here plus 10 pips, because this is 12 hours. 184.17. 184.17. Let's see, this we survived that stop loss, and it went up to 184.12. So our our entry point, because it has to be triggered, this did not trigger, this trigger. So our entry point was here, and our stop loss was a little bit there on the 17. So we are entering minus 10 pips around this point, with just 17 here around this point. So 220 pips of risk we are taking, and we survived this. And the second opportunity came when the upward trend line broken here. So when you are taking this trade here, I hope you all understanding, upward trend line is broken. When upward trend line is broken, we are taking a trade of 232 pips, and then the upward trend line the last time broken was here. So we got 3 opportunities to short the market according to our it has to be triggered. So this is the first one, upward trend line broken. This is the second one, which matches with our sample setup, and the third one was here. And these are the 3 possible trades which we were taken when the trade was going down after this zone of resistance, and after this zone of resistance. Then what we see, that we see so many downtrend line. When you are seeing more and more a downtrend line, you should be eager to see the break of a downtrend line, because that is a possible first possibility of uptrend line, which comes here. This is a morning star. This is a morning star, and the first break happened here. So when the only difference, as I'm telling you again and again, between an amateur trader and a professional trader is, amateur traders are often correct. I repeat, amateur traders are often correct in their trade direction, in the identification of their direction. But the difference between a professional and amateur is the timing of the amateur traders are incorrect. Most often they are in a placing the trade, or they are jumping into a trade so late, an immediate small correction happens, and then they will get frightened because of fear of losing money, and then the trade will again reverse and go to the same direction. So I would say amateurs are more often than not, they are correct in identifying the trend, but they are wrong in 2 or 3 things. First wrong is the timing of their taking a trade, and then the second wrong thing they can do is, they possibly do, is taking too many trades. And then as I say, less is more. So from here, this date to this date, from this day, from even if we count from here, from this date to this date, we had 66 bars, and that means 33 days. 33 days. If we follow trend line, there are only 3 trades to go short. Only 3 trades in 33 days. That means 1 trade per 11 days. So second third of mistake they do, then they take too many trades, and the biggest mistake they do is not following the money management or the risk management principles or the rules, and they take 10% trade, 7% trade, and then they blow their account, whatever it is, 2000, 5000, 10,000, 12,000, 40,000, doesn't matter. Market does not care, because it is 6.67 trillion dollar market every day. So that we have to learn from the mistakes of the amateur trader, which they do, not many, 2 or 3, and then do not repeat that mistake. All right. So if we are very cautious about risk element associated with the trade, so we would take this trade with 217 plus 10, 27 pips of risk associated here. To answer Sri's question, Sri is asking the difference between reversal and reversal and what did you say? Correction, reversal and pullback. Yeah. So very interesting. See this, when you see this morning star, what do you say? Is this big? Can anyone in this planet Earth, forget about NP Financials, can anyone here say that this fellow is going to go up to this point or this point or this point or this point? Anyone?
It's a reversal, so we expect that at least it should move upwards till it finds the opposite of the reverse.
Fantastic. So you yourself have answered that question, because the right hand side is unknown. So you would first consider this as a reversal, isn't it? Then we may consider, no, sorry, I am wrong. We first consider this as a correction, because it is trying to go to a corrective level of Fibonacci. You remember Fibonacci?
Okay, good.
Yeah.
Okay. So 38 points.
Yeah. So first thing is we should think that this is a correction. This is a possible correction, because it is against the impulsive wave. It is against the impulsive wave. So first thing first, we have to first understand that this is a correction through Fibonacci. Module 3, Unit 2. The benefit of I am identifying this as a reversal is we can draw a Fibonacci from this swing, because price is here. We go up, we can draw from here, we can draw from here, we can draw from here. 3 Fibonaccis can be drawn, isn't it? So let's draw a Fibonacci. Which one did it do? This one here, and then possibly we'll go up to this point here and draw a Fibonacci from here to here. If you are not happy, then possibly you can join. That is fine. That is fine. Okay, brilliant. Thank you for that. All right. So first we are considering this, to answer your question, as a correction. Yeah. So how do that? Then the next interesting question you should ask is, how do I know that this is going to be a correction or not? Even correction. Forget about reversals. So the answer to that question is, if it is going to 38.2 minimum, if it is going to minimum 38.2, then it is a possible correction. If it is going up to 23.6 and reverse, then it is not at all a correction, not even a correction, it's a continuation. Clear? Alright, so let's see whether it is first doing a correction. What is a correction? It should go and touch 38.2. Okay, let's see. It touched? It touched 38.2, then that is a correction. Yeah. Then the next question should come, how much it can correct up to 50, 61, 78, 88, and no one knows this. No one. Okay. So what we have to do, we have to still consider this as a correction till 88.6 is broken.
Right.
Till 88.
So it is not up to 50%.
No. Till 88.6 of the correct Fibonacci. This is an incorrect Fibonacci. That's what I was hesitating. Why it is an incorrect Fibonacci? Because as per NP Financials, when we are here, we have to draw the Fibonacci from the first swing high to the first swing high. Yeah, that's what I have drawn. Yeah. So if it is crossing this 88.6, then it will break 1. This is the 1, and this is the 2. So whether you are following it, it can break 1, cannot break 2, or Fibonacci 88.6, they are same. Are you understanding?
Sir, when you say first swing high, or so that is the highest swing high in that period or
First one. Okay, the advantage of this trend lines, program trend lines, is what is this a swing low from the green dot?
swing low? Yeah.
Is this a swing high from the red dot?
Yep.
So you don't have to do not to find, you don't have to break your head which is swing high and swing low, because sometimes these swing highs are hidden by 1 pip or even less than 1 pip. So you just see this red dot to the green dot and join. So this is your first Fibonacci, and for Fibonacci confluence you can draw from here to see the Fibonacci confluence. Then we would start with correction. So it has reached the 38.2, it has corrected. Then we will see the big 38.2, it reached the big 38.2, so it's still a correction. And now if the 88.6 is broken, then possible change in reversal. Then your question, then your second part would come into place, that is a reversal. So there are two ways to know whether this is a correction or a reversal. First thing, 38.2 of a correct Fibonacci, and you know what is a correct Fibonacci. And then the rule of breaking up trend line, like it has broken 4 trend lines, 1 2 3 4. Can you see that?
Yeah.
So breaking up a 4 trend line gives me a confidence, to go back to Lisa's question, confidence. Breaking up 3 or 4 trend lines gives us a confidence that it is a possible reversal. But we will follow our principle of break 1, break 2. So it has broken 1, broken 2, and 88.6, and let's see. So it is a reversal.
Yeah.
Did I answer question?
Yeah. So now can we just follow the same thing after the dark cloud cover, please?
After the dark cloud, I have other questions to answer, but anyway, so let's go to dark cloud cover. So this one.
Yeah.
Okay. So this one actually resembles with our zone of resistance, if you remember the one we have drawn previously. Yeah, zone of resistance. You can extend it to here. Yeah. So zone of resistance, we have a zone of resistance, and if you draw a big Fibonacci, if you have drawn the biggest Fibonacci from the highest swing red point here to the lowest green point here, we have 78.6 reversal. Can you see that? So for knowing reversals and corrections, the best way is module 3 unit 1 and 2. Do you agree?
Okay. Yeah. No, I totally agree.
Okay. If you agree that, then do you agree that this is a 78.6 rejections of the big Fibonacci?
Correct. Yes.
Okay. So now what you would like to name it? Is it a possible correction or a reversal? First thing to start is what I said just now.
Oh, first thing to start is a correction.
Is a correction. Is a correction. So first thing we would say that this will correct, and how much it could correct? We can draw Fibonacci from here to here, from Fibonacci to from here to here, and from Fibonacci from here to here.
Yeah.
This being very small, we will not take that. We will take this one. Yeah, we can sometimes technical is not 100%. So we'll go to up to this point, and then we'll draw this Fibonacci. Happy?
Yeah.
So if it is coming up to 38 point, then it's a correction. Otherwise, a straight continuation to the upside. Okay, let's see.
Okay. Thank you very much, sir.
All done? Your question is answered?
Yeah.
Lisa is asking Sri Molalo is asking, please explain what it means if it break 1 it cannot break 2. Fantastic, Molalo. This is a because you are very new, you and Sinsong are very new, but I appreciate the questions being asked by you. Very good, excellent questions. So break 1 and break 2 are the principles which you have not come across, because you have not gone to that level, because you are only in module 3 unit 1 of the Trader Foundation. But it tells us if we go to the break 1 and break 2, it can be two-way, because you are in only starting point. I would say in a bigger time frame, maybe in 2 day or daily, so what you have to see to start with, because again I repeat, because you are in a 3 months trader foundation, it will be easy for you to follow the break 1 break 2 principle of supposing it is going down. Break 1 break 2 principle when we started at NP Financials is, first see, if supposing we are here, first see the swing high which is here, what, 29.63. so price has to break this 129 66.8 as a break 1 principle of swing high corresponding to this lowest swing low, and then the break 2 is here when it has to break the high of 13000. but when you grow, so let's see what happens to that. It has not broken one. It has not yet broken one. So from your answering to your question, it has not broken one means it has not changed direction. But when you are trained by us for some time, maybe at least 1 year, then we would say that break 1 and break 2 in a downtrend is close below above the bearish bar 1 and bearish bar 2, and then at this high taken out by the pips is the rule of break 1 and break 2. so the advanced rule of break 1 break 2 here, if I have to hide the right hand side, so it has to break this one first. Break means at NP Financials close above high taken out, and then it has to break this one, close above high taken out. Let's see which one did that. This fellow broke 1 but did not break 2, and the next one close here is 128.65, and the high here is 128.67, still not broken. This fellow has broken 1 and 2, so this is the possible start of an uptrend, and if the high is taken out by 20 pips because of the day, and possibly it is taken out by 20 pips, 43 plus 20 63, and yeah, it is 78. Did I answer your question, Molalo? Lisa saying it's a bit hard without the mic. Yes, Lisa, you have to take a new computer available at $250. And Molala says yes, thanks from Harvey Norman from Boxing Day sale. No, just on the lighter side. Okay, she's asking, from the highest swing high around 1st September to now, the trend looks bearish. Your trade call for Aussie dollar looks like it is a corrective move. That's correct. So Lisa has understood correctly, because she's having some microphone problem. I think it is only with this class, but because she can talk to her mom and so on, and I think so. Alright, to answer her question is highest swing high around 1st September. Yeah, that's correct. To now means on this date. The trend looks bearish. Of course this is bearish, because why this is bearish? Because the swing highs and swing lows are coming down. If I join the swing high, it came down, came down, came down, came down. Swing lows are coming down, swing highs are coming down, and the swing lows are coming down, and then in this period we have a wedge. In this period, when the peaks and drops are going up, this is a rising wedge in a downtrend. Shin Song, is this a rising wedge in a downtrend?
Oh yes.
Yeah, because Shin Song is also very new like Molalo, and we were studying the possibility of identifying rising waves in a downtrend and falling waves in a downtrend, rising waves in an uptrend, rising waves in a falling waves in an uptrend. So rising waves in a downtrend is what? Continuation or reversal? Shin Song?
Continuation.
Fantastic. It's a continuation here, and rising waves this is a downtrend. Is a continuation here, and falling wedge in a downtrend is a reversal. So the rising wedge in a downtrend is a continuation, and my price continued here. So I forgot the question. So what was the question? Yeah, 1st September to now, it looks bearish. Yeah, it was definitely bearish. Your trade call on first on looks like it is a corrective. Yes. So when we are here again, I'll go back to same question Lisa is asking, what Sri asked before. whether it is a correction or a I think I have made it very clear which one is correction and which one is not. So to start with, anything to will start with is a correction. So the movement here, as we agree of all of us, is a downtrend because the peaks and troughs are coming down. Then we'll have a correction. How to have when we have a outside bar. This is outside bar. When we have an outside bar, then it is both a swing high and a swing low. Unfortunately, but that is how it works. Outside bar is always a possible swing high as well as swing low. So if that is the case, then we would not draw the Fibonacci. It is useless to draw the Fibonacci because one bar will. So we'll first drop from this swing high to this swing low. So to see whether it is going up to 38.22, whether to know whether this is at all a correction. Otherwise, if it is reversing from here, it is a continuation down. Go. Yes, it is a correction. Then we need wait for the reversals to see here, and let's see what happened. It went up to 761.8. It's got a rejection. It is printing a possible swing low, swing high, and the problem here is who thinks this is a reversal and what percentage associated with it. This is a very good question I'm asking now. You are asking me thousands of questions. I am asking one question. Is this a what probability you will give out of 100? First of all, is this a reversal? Number one question. And number two, what probability you would give? Number two, what is the kind of reversal? And number three, what probability you would give to this reversal? Three questions.
So far, it is not a reversal.
Hmm?
It is not a reversal
It's not a reversal. Why?
because there is no, of course, there is no reversal setup like a candlestick,
100%. That's an engulfing.
but it has got a big tail.
Engulfing has nothing to do with tail. Hammer has to deal with tail. Engulfing has nothing to do with tail, only body. You have to go back to module 3 and unit 1, my dear friend. Lisa is saying 60% evening star. This is not evening star, my dear friend, because this close is not below the 50% of this bar, of this candle. I am afraid you are not visiting for module number 3 unit 1 very frequently. Alright, so what percentage? Again I repeat. So is this a reversal? Number 1. What type of reversal? Number 2, already answered by me, engulfing. And what percentage you will give to this reversal? I am not getting that. Leisha gave 60%. Anyone?
Yeah, Father, can you draw a trend line, an uptrend line?
Uptrend line. Why should I draw an uptrend line? From where to where?
Come back to your original thing. We want to see if it's a trend line break.
Here, this one here.
Uptrend line, yeah, from the bottom.
From the bottom to?
See?
Hmm?
Yeah, from the bottom, an uptrend line.
There is no uptrend line. That's what I am hesitating.
Okay.
There is no uptrend line. Why there is no uptrend line? I would not draw it uptrend line. Not because my system has not drawn. That is number 1. And number 2 is what? Why we would not draw a uptrend line? Sinale. Huh? We would not draw uptrend line because who said Sinale? It's a little one saying Sinale. What is this Sinale? Who's that?
One of your
No. My sons are grown up boys now.
it might be one you don't know about.
Unbelievable. Alright, I'll handle you, Selvan, in a later say. Okay, who said Sinale? Lisa? Is it your little one? Lisa says no. Alright. Maybe Sin Song. Sin Song? Is it from yours? Is it from you? Your daughter? Sin Song has gone to pacify her daughter, his daughter.
It's swing lows. There's no swing lows.
So, yes, Sin Song said there is no swing low. Very good. Since answer there is no swing low, that's why I'm not drawing my uptrend line. That's why the system has not drawn any uptrend line. The one I'm asking is not very difficult, my dear friend. Lisa says 61.8 cent. And okay, the why I'm what the question I'm asking is very simple, and you are not answering that because you have forgotten. Because this close is not below this low, my dear friend. This close is even it below 61%, even it is engulfing, even it is below 50%, but to me it is a very weak 25% probability that there is a possibility. Of course it can come down, of course it can come down, but very little probability that this will going to go down, because the close, it has not broken one, forget about breaking two. That was the question I'm asking, and you did not answer even if you know it. Alright, so did I answer your question, Passenger? Looks like it is a correct. Yeah, the answer to that question is it is a corrective move, but the correction, this is a fake, I think. Time will tell, I may be wrong. I am wrong almost 35% of the time in my journal. I may be wrong, but the probability says to me that is the challenge. That is the challenge of a trader. Go to the last bar and tell me what it is. That's what I am saying. Going to the last bar and telling you, as per my understanding, this is a low probability reversal of engulfing and below 50%, because it did not close below 1. So that is a very low probability trade, and it has not broken a trend line because there is no trend line. And then the Lisa is asked, did I also answer your question, Lisa? Then Lisa is having a big question. I think I understand what you are trying to teach us, Partha. You have always said to trade in the direction of the trend. That's correct. But I think you were trying to teach us how to take trades regardless of direction. That's correct. When the majority are fearful as professional traders, that's correct. We do not know at the time of entry whether the trade is a correction or will become a change in the trend direction. That's exactly correct. Is this right, Partha? Lisa, you got 100 out of 100. So me speaking for last 1 hour 40 minutes, you make my not day, what is that, 60 plus 40, 100 minutes. Yeah, that you have understood correctly. And then Moulalo says yes, thanks. Selvan says, so Partha, why is the trade call target 74? 74 trade call target was based on very simple principles of 1%, 1%. So if I have to go to the trade idea, Sri is thinking I have not answered all his questions, but I'll go back and reply to all your questions, Sri.
Yeah, okay, thank you.
So, because he is the only person who has taken the pain to write down the questions and sending back to me. I will definitely honor his questions. 71.13, 69.80, what is the difference? 69, 80, 70, 20 pips, 100 and 120, 120, 133, 133 is the am I correct mathematically? 133, correct. The difference between long and the stop position is 133. So 133, if you are taking 133 pips of risk, your first target should be 1%, which is 71.13 plus 133 should be 72.66. This is a little bit less because this is a corrective action. That's why I put the round number. Round number can be dangerous one. So possible target is 72, which we achieved here at this point of 72.09, which we achieved, and then we hang on to the trade to go up to this point, which is 72. I don't know where you got 74, Selvan.
It was on your trade call.
Trade call tells 72, not 74. So this the kid sound from the kid was from you. I understand now. You got so disturbed that you did not see the chart even. My goodness, unbelievable. How can you do that, Selvan? All right, where is Sri Uttagi gone now? Sri Uttagi's question. Is in Sri is in Perth. All right. Question 3. How many questions you have asked? I love questions. My
These are all
understand.
just repeated
Six questions. Okay, let's see. Please explain the trend line drawn from 1st to 8th September Aussie daily as per discussion in WhatsApp. I think I have already answered that question, didn't I?
Yeah,
The answer.
yeah, yeah.
You can see the red dot. Then you
But
are asking what but.
the, I mean, what I observed is that is the swing high of the monthly.
Huh? Swing high of the daily. You
I
all are
mean,
having baby which you don't know where it
daily,
is coming from. Huh?
daily on the referencing to the pivot, monthly pivot.
Monthly pivot. I don't know monthly pivot. Let's do that. Sri is now confusing me with a monthly pivot. Let's go.
If you go to the daily,
Monthly pivot.
daily
I
chart,
did that monthly pivot. Yeah. Monthly pivot. This is monthly pivot. Yeah. Go.
yeah. So from referencing to the monthly pivot, that is the first swing high.
We don't reference pivot to get swing high. Swing high is a high of
Correct, correct.
higher than
Swing
this and
high.
higher than that.
That
Swing
is
high
the
has nothing to
first
do with
swing
pivot.
high
Huh?
of that particular month.
Okay, that's correct. Swing high is higher than the previous one and the next one. This has nothing to do with the pivot, but it is appearing at a R2. That is good. Okay, go.
So you have joined the first swing high of that month to the next second swing high.
That's correct. This is the swing high draw, and extend that to get this line.
Extended. So then break of that trend line. That's a signal for to go long.
That's correct, because it is a 5% drop and a heavy drop.
Yeah, yeah. And this trend lines can be drawn on any time frame on any instrument. Is that correct?
It can be drawn on any time frame on any instrument, and as you see in our WhatsApp and Facebook and all, we are trading intraday with these trend lines and drawn everywhere.
Yeah, yeah. That was the question.
That was the question.
I think it was.
I answered your question.
Yeah. So that's question number 3 is done.
Question number 3 is done. My observation: the trend line drawn from first. Okay, we answered that. Question 4. Please refer to the screenshot of 2-day live cattle chart. We're now going to the commodity. I love different asset classes questions, which is good. And explain how to consider trading from 1st of April to 1st of May. What is the professional advanced strategy to capitalize approximately 864 pips? Let's go to the commodity trading strategy. Share trading, and then I go to commodity trading. Live cattle, 1st April. Live cattle, 1st of April. 1st of April. You are asking which question? From here?
Yeah, yeah, yeah.
And your question is, explain how to consider trading from 1st April. Very simple. You are trained by us in commodity, isn't it?
Yeah, yeah.
And you have forgotten everything, isn't it?
It's not there.
Huh? Yes or no? Huh? Yes or no?
50% no.
50% no, 50% yes. Okay, you are honest. That's good. Okay. So 1st April, 1st May, we want to capture 864. Okay, let's see what is our live cattle gave us from 1st of April to 1st of till date. Right. This is live cattle, and 1st of April, 1st of April, 1st of this is on here. Okay, I'll go from here. Okay, Sri, all right.
Yeah. So that's
So that's a buy signal here because from the strategy.
that is on which date, sir? That is
13th of April. You are referring to 864. Which 800? Huh?
is it a 2-day chart or a daily?
This is 2-day chart.
2 So I got my first signal on 7th of April.
Live cattle.
Yeah.
This is 4th of September, my dear. 864 pips is from 4th of September, not April.
No. What I'm trying to say is
What you are trying to say and what you have written is not matching. You are saying 864 pips, and 864 pips I can see is from September. Is this from here? From April? Is it April? Oh, you are right actually. April. Alright. So if you are asking how to capture this 864 pips, the answer is very simple. The answer is you just go, either you follow this strategy here to go long. Strategies are important, excellent to begin with, because it will give you hand holding,
Okay.
because the difference between strategy and a possible break of a trend line type of approach, or possibly it can break one, break two type of approach, is when you are at this last bar of the right hand side, only the strategy will tell you to go long or short, isn't it?
Correct. Correct. Correct.
So that is the advantage of when you are here, only the strategy will tell you go short. When you are here, strategy will tell you to go short. Uh, so that is the difference between a strategy and the other approaches. The difference between strategy and other approaches: strategy will tell you every time, even if you bother it or not, even if you think of it or not, if you are taking, it will come and tell you go long. So if you are going long from here, you will definitely not get 864 pips, but possibly you will get some pips from here to there, whatever it is, maybe 500 pips out of that. Getting 864 out of 864, this is 1572. I'm confused, Sri, with this.
Okay. I will ask this question
Mm.
now. Sir.
Yeah.
See, the long signal has come on 7th of April.
Yes.
Yeah.
Mm.
High plus the EST.
That's correct.
Okay. So when I was on that day,
Mm.
again the discussion we discussed regarding the break one, break two,
Mm.
two bearish bar.
Mm.
Yeah. So that is on 1st of April.
Mm.
So we should be we should be taking a long trade after confirmation of the uh, break of a downtrend,
Mm.
which is again break of two. Yeah. So that
Break
is
up downtrend may not be necessarily break up 2, because let's see, let's stop you there and see the break of a downtrend line around that period of time we are talking about. See the trend lines here, don't forget, it is drawn from 8th 1st of August. Yeah. So when you are going to do it from April, you have to make it 3 months before. 3 months before. So when you are in April, this should be from January. When you are in September, this should be or at least you should make it 1 month before. So supposing since we are going to April, we have to start the trend line from 1st of September, 1st of March. Let's go to that.
so
We are here. We are here. Should I make it today?
2 day, please. Yeah.
Okay. Today, and then I'll go to go. Now go. Yeah, we are in 8th of April. Go.
Yeah. 8th of April. Yeah.
Mm. You want to see your chart?
Yeah. Yeah. I'm referring to my chart.
Mm.
So what I mean, based on my previous discussions, break of two bearish bars, previous bearish bar,
Mm.
which is the second bearish bar is on the formed on the 1st of April.
Mm.
Yeah.
Mm.
So I got a straight line.
Mm.
Then until the point it reaches on 7th of May.
Mm.
On 7th of May, it has broken
Mm.
the second high.
Mm.
So till then, I
Mm.
shouldn't be taking the trade. That's how I understood that.
Stop.
So
Stop there. Stop
yeah,
there. When you say you should not be taking that trade, on the belief that you will only take the trade if it breaks 2.
yeah,
If you believe that, then only you are not taking a trade. If you believe something else, you would have taken the trade here, for example.
correct, correct, correct.
Okay, let go. Go. Go.
So I believed that I should take the trade only after the break of this
Mm.
second high,
Mm.
which is on second,
Mm.
which is
You
happened
don't have
on
to tell me
7th
the
of
date.
May.
I understand. Yeah. Mm.
So
My
now
hand.
question,
Mm. My hand is
now
matching with your dates. Yeah.
yeah.
Mm. Go.
Now my question is from
Mm.
5th of April to 7th of May.
Mm.
It is going upward. The price
Mm.
is moving upward.
Mm.
How to capitalize that?
Mm. How to
If I have a strong belief in that only, I have to enter.
break one,
On
break two.
yes, sir.
Then in this instance, there is no way, because you are restricting yourself to enter the market when it goes up to this break one, break two. That too in a 2-day chart. That too in a 2-day chart. That means it will be it is a problem here to that principle, because these are big bars.
I see. Okay. So
Big
in that
bars
case,
hold on. Big bars breaking one, break two eats so many pips. But small bars here, break one, break two is a tremendous entry here and here.
sure,
Now
sure.
go. Now go.
Okay. My question is now, then how to implement that understanding of second break of second bar is the only way to get confirm the break of trend line.
The best way would be, if I have understood correctly, the best way is to break it to maybe 1 day daily chart,
Okay. Okay. Then
and
lower time frame.
then go to a lower time frame, and then wait for the break of a downtrend line around that time, uh, which is this one. If it has broken, I think this has broken this downtrend, isn't it? This red trend line is broken by this green bar, isn't it? I think so. So you would enter here when the line is broken here, with the stop loss here. So that stop loss is it is because it is a commodity, it is 660 some 700 800 pips, and then you got triggered, and you hang on to your because you are not stopped out, you are still hanging on and adding positions,
So it's
and
important to go to the
and you got 1334 pips
time
over time frame. Yeah. Go now. Next question.
That's
Understood?
it.
Did I answer your question?
Yes.
Next question. Good question. Very good question. Please refer to the screenshot of 2-day candlestick chart. Is there any divergence or correlation between price action and entry stop distance calculation? No. You are thinking too much. Correlation between price action means what? You first explain. I understand. You are trying to say it here. No. Don't do that mistake.
Okay.
No. I told you before also. Sri is making a mistake, and from his thinking, he is thinking that this is a divergence indicator. No, not at all. This is only ESD, and the best way to handle that ESD is to minimize that as I have done. I have minimized this one ESD, and I can see only 99. I cannot even see the line. Yeah, for that what you have to do, make a thicker line. You have to make a thicker line and go to your favorite color, maybe yellow, and see that it is only 99. So there is no correlation. To answer that question is 0.
Okay. Good.
Don't consider that as a divergence. No, this is not at all an indicator. It's only a calculation. It's a mathematical calculation. So I answered your question.
Yes, sir. That is number
5 done.
5.
And so when is the price for when?
Okay. This has been discussed.
This already discussed.
Yeah.
And this one?
Okay. Now I can work myself this one.
You can. Brilliant.
Yeah.
So I have answered all your questions.
Yes, sir. Thank you very much.
Okay. All right. So anyone having any other questions? We have 5 minutes to go. Lisa is asking, when does the program draw a new trend line? Very simple. When it becomes a tentative, that's a very good question. When it becomes a tentative, then the signal draws a line. So what you have to do? We have to. So we are in 2nd of October. So what we will do? We'll go here and change the month. We are in October, so we'll keep 9th, 1 month before. 1st September. So this is year. That is 2020. Month 09. Date 01. So that is we are starting from 1st of September, and we are seeing this. And to answer Alisha's question, when is this line drawn? The last one is drawn from, to answer her question, the last one is drawn between this swing low, provided there is swing high, and this line is drawn on this date. On this date, when it proves itself to be a swing low, then the line is drawn on the next date. Did I answer your question, Lisa? Lisa says yes. And Selvan says, how do we access the trend line program? You have to be a subscriber to that to access the trend line program. There, because it's a lot of effort and time spent, and research done, testing done, so there's a little cost associated with it. Next question. Have I answered all your questions? I mean, anyone want to ask last minute question? Vinay, Sukhdeep, you have not asked any questions. Molalu has asked. Selvan has asked. So this says no. So and that. Alright. So if you are exhausted with your questions, please trade well, in the sense you must follow the rules of risk management and money management. Number one. Number two, must put a stop loss for 1% as per our rules. Must all. Number three, always put a stop loss. Must. I cannot stress more on that. And if you have any experience, you can add, but I am very serious on this. Last minute note. And the fourth suggestions or advice, general financial product advice, would be trade less and not more. That trade less and not more. So that is the last. And if you see for track record of our last 45 months, which is 4 years, we have taken only 314 trades in the trade idea section. That means 7 trades per month. That means 1 trade per 3 days, unless and until you are becoming an expert and a professional. You are increasing and you are taking 5 trades per day. That is the different scenario, and you are trained by us. Lesson on that, you do that. Sukhdeep says stop losses do not work if very volatile. Yeah, that's correct, Sukhdeep. Stop loss will not work for instruments like, if I have to go and show you a display list, and if I have to display list, and if I have to answer Sukhdeep's question, so if I go to our preferred, I'm going a little bit ahead, not ahead, crossing the limit of 8 shares. I'm just, for example, if I'm watching, you all know a company called Run, which is an US based company, and if you see, that company is really running. See the company running really running to the upside from $7 to $77 post COVID. So this fellow is really running, and Sukhdeep would be knowing more on this. So for example, if to answer his question, stop loss in a very volatile market, for a 1 day chart, the stop loss can be taken out like this. If you're long and you're putting a stop loss, this fellow has definitely taken the stop loss, but you can go long again here. I understand that, but that kind of thing will not happen for a better shares like for example Square. We are thinking to replace. We have not done it for last 4 years, but we are thinking to replace Goldman Sachs with possible introduction of Square, and will not change anything. Apple, Amazon, Tesla, Google, Facebook, Cochlear, CSL, we are not going to change that, but we are not yet implemented. But when we are implementing, we'll tell you that instead of Goldman Sachs, which is a laggard, we'll possibly go and do Square, which is doing very good now, which is extremely doing very good now. Next question, Sri says, thank you so much for good session. Maulana says, thanks very much for the call, much appreciated. Alright, so if you are not having any question, trade well, stay safe, and take care of yourself, especially your health and your mental conditions. Thanks for that. And Shin Chong said, thanks very much. Thank you, and have fun and do well. I really enjoyed. Bye for now. Thanks, Lisa. Thanks, Sukdeep. Thanks, everyone.